All right, guys, thanks for tuning in. We're starting in 2 minutes. Share this around. We've got an emergency election stream here. Doing this kind of last minute. We knew the election was coming. We've been planning for this. It's a huge event. Share this around. We're going to do a $50,000 giveaway at the end of the stream. One lucky winner. We got John and Ryan joining us today. Stay tuned. All right. Good morning, guys. Let me step into the screen there. Let me move this around too. Maybe Ryan is better on the portrait mode there. Perfect. Ryan's joining on the phone today. We got John as well. Emma's stepping out for today and little bits of a cough, so we're not going to have her on stream. Guys, this is a really important one here today. The election is happening. We've seen the market open absolutely bullishly. 5% up on Bitcoin, 1.3% up on the NASDAQ, gold at 0.2, Dow Jones at 0.86 right on the open. Beautiful day for the markets. Now, will this last? Let's look into the charts here briefly, guys. I wonder if you can see that too well. I'm not sure. Hopefully, it's not too blurry. I might have to zoom in here for you guys. Give us a in the chat what you think is going to be happening. Is this going to hold? We have Ryan monitoring the chat logs today. If he sees anything important, he's going to pipe up and speak up. If he wants to ask any questions, guys, post your questions below. Today we're seeing an absolute beautiful movement here. Let's quickly look at Bitcoin because I want to cover the monthly candles. This is a new month. We had a lovely Halloween stream last week there, a little bit of fun, but let's get back into the actual markets. Now, you guys might be saying, hey, this monthly candle is really, really nice. We closed back beyond, and we're going to be going to the bullish side. Now, there is a little bit of confusion because if we go to other crypto here on Coinbase, on other crypto exchanges, we have Coinbase showing really strong wick to the downside. It's not looking good for the Coinbase one in terms of that wick failing to make a new high. Now, we did have a strong move up. So expectations are we are going to be coming back down a little bit here. If you're just looking at just the market, we're going to be coming back down sort of this zone at least. Guys, Ryan has a view, though, that says because the election results, he's thinking the election results are going to skew this and just completely rock. We have a little side bet going on here that we're having a lot of fun with, and seeing if we can actually if price is going to go down or up. I'm betting it's going to go down. Ryan thinks it's going to go up. Ryan, explain your position.
Yeah, so I think that there's a couple of things right now. It's just not, to me, an asset that you can look at and judge by past charts. It's kind of like uncharted waters where there's only a certain amount of Bitcoin that's traded to begin with that's in circulation, and you have all kinds of capital being injected into this this instrument or this asset class that wasn't there before. And all of that coupled with favorable policy and things, depending on who wins the election, I think will catapult it. I think that if one of the candidates wins, it goes much higher immediately. I think if the other candidate wins, it still goes much higher. I just think it takes an extra period of time before it does that. But I do believe post-election and the rest of this year, it is going to be dramatically higher than it is right now.
Yeah, excellent. I'm right on board with next year for sure. At some point next year, we're going to be absolutely booming. It doesn't matter who wins, really. Bitcoin for sure is going to be doing well. And the caveat that I'm just a little bit worried about, guys, is everyone has been buying up the market on both sides of the election. Whether it's Trump or Kamala, both of them want the market to show support here based off of the views that each candidate has, right? And I don't think either side wants the market to do poorly. So everyone's been buying and holding and making sure that there's no panic in the markets so that their position is held strong and people still support them as a presidential candidate, right? And now we're coming into the event here. We don't have any results yet, and the price is going up, right? And that's completely meaningless at this point until we get any results. But it's still nice to see, I suppose, if you are a bull in the market. Now, my prediction is, okay, so once the results come in, that's when all of the tides can let loose and people will sell for the profits that they have made, thus causing the crash I'm looking for. Now, might perfectly be all well and wrong, and I'm happy if I'm wrong, but I'm also happy if I'm right. Let's look at the NASDAQ next. NASDAQ closing the past month bearishly on the candle, but not losing too much there, still closing above this previous level of significance. So NASDAQ not looking too bad. Weekly candle, however, might be looking for some more downside here. So it does look like we could have a little bit of a pullback here, back down to this zone that we'd be looking for. All right. Let's go to the S&P. Similar sort of concepts here. There is a level that we might look for on the monthly candles there. Dailies, again, same sort of deal. Coming down, retesting these zones, probably going to reject off that zone and come back down a little bit more, unless, once again, the election causes some sort of significance. Gold, as always, guys, gold has been absolutely booming. Last week, we had a little bit of a crash, which was a little bit concerning on the gold. That is a really nasty wick coming into last week. So the monthly, though, looking perfectly fine. I would expect to see, based off of that wick, maybe a retest of this 2633 back down in that daily sort of zone here that had some consolidation. That would look really nice based off of just that wick and sort of that area there, so we can reaccumulate and then continue to the upside. It tends to go up. It's a beautiful market to just sit and play in. All right. Well, that being said, let's close off the charts for now and jump into some questions here. So,
well, no one asked me what my prediction was for Bitcoin.
That's what we're going to go into. We're going to go into. I wanted to just look at my notes here. I wanted to get Ryan first on that. Right, John, your prediction on Bitcoin. Bring it to me.
Good question. Okay, so I think that Bitcoin and gold are going to be correlated in this election. I believe that they're going to be inverse of each other. I think if one particular candidate wins, we're going to see Bitcoin go up and gold go down. Basically, the market favoring the U.S. dollar in that case, feeling that the U.S. dollar is going to be stronger for the next 4 years. I think if candidate B wins, that Bitcoin's going to tank and gold is going to shoot up. So that's what I think is going to happen. We're going to see an inverse between those two pairs.
Yeah. And guys, you might notice that we're using candidate A and candidate B. We're not going to put any biases on you guys on our opinions on the markets, but you guys can make your own predictions based off of that. There are two options that can happen. My personal opinion is the opposite of John. I think it doesn't matter. I don't think it matters in terms of the short term. I think it matters in terms of the next few years, what the presidency candidates actually have to offer and changes in the U.S. economy. In the next 6 months, I don't think it's going to matter. What's your take on that, John? Are you talking about in the early expectations here? Do you think that they're going to be correlated inversely?
Sure. So, I mean, I would say for the first, let's say, week or so, it's anyone's guess.
Yeah.
Like I would say the markets are going to be volatile no matter who wins. It's going to be up, down, left, right. You're not going to know what's going on. But then once the emotions settle down and the policies, people start thinking about the actual policies of whomever wins, that's when you're going to start seeing things firm up. And that's where you're going to start seeing, those pairs go in the direction that I believe they're going to go in.
Yeah, perfect. Good answer. So that being said, I have a very I agree with the ranging markets is basically what you're applying here, saying that the next couple weeks it's going to be super, super volatile. Guys, just so you're warned, slippage, spreads, volatility, all-time high. This is going to be the maximum you have ever seen in history. We have the most traders trading in the market ever, right? With the most crazy scenario going on. And that is a recipe for ranging markets. So this is Ryan's sort of specialty when he trades. He likes to scalp back and forth. So I'd like to hear, Ryan, how are you going to actually be trading this? Based off of ranging markets, or are you just going to sit and play?
No, if I was to trade it, I would do both. I guess I would if it's really choppy, which what I think it's going to be, I would watch a trend or a particular, let's say Bitcoin. I'd watch that for an hour. There'd be a ceiling and floor, and it would just bounce around, right?
Yeah,
it would be a big ceiling or floor. It would be, I don't know, 1-2%. But when it does that, if you look at a trend for an hour and it does that, I don't know, 20 times, that's a good one to trade. And so I'd buy at the top and I'd let it go down a little bit. I'd sell out. I'd hold things for probably 2 to 3 minutes at a time. I think Bitcoin right now is a scalper's dream, to be honest with you. It's also interesting because it's also probably the best long-term asset to hold over the next 7 to 10 years. I don't think that there is going to be any other asset class that even comes remotely close to performing the level of return. You might have like an individual stock that, has some crazy breakout or something, but I don't think very much is going to rival Bitcoin. The important thing with Bitcoin is that the dollar continues to devalue. And so people have to hold it because it's the hedge against inflation that people have been looking for and needed forever.
Correct. I think I 100% agree with that. Now, mind you, this is not a discussion on whether or not Bitcoin's going to do well. I think we all know Bitcoin is kind of the new era here that's emerging, and people are just trying to figure out how to adapt with it, figure out how to make money with it, and then apply it into the new world. Now, the question you were kind of answering, so how do you suggest, it's popped up on the screen here, how do you suggest we trade a volatile market? Let's say we are trading the range. You said just scalp it a little bit back and forth, the highs and lows. Guys, what I would be doing personally is I would be putting my entries just a little bit more conservative, a little bit safer, and a little bit lower risk, because you're going to get these massive swings and spikes, and you need to make sure you don't get liquidated. You could also put multiple entries at various points and have really loose position stops compared to how you normally would trade, because it's super, super likely that you're going to get stopped out here. Ryan, you got any, do you have any different point of view on there?
Yeah, I've never used, like you, I don't use stop losses. I've never used one in my life. I think actually one time I used one when I went to the gym and I had a trade that was open.
Yeah.
But let me tell you guys, like, if you are in a position where you can't watch what you're trading right now, sitting in front of a computer, you shouldn't be doing it right now. It is way too choppy of a market, and it'll be so easy for you to be taken out of a position. If I was going to do anything, it would be very short-term, quick scalps right now. If you have a good trend to do it, and if you don't, I wouldn't do anything. This is not a swing trading market the next, few days by any means. If you do that, you're going to get taken out of the position almost guaranteed because it's going to be so choppy.
Right on. Yeah. So there's another question popping up here right now. How do large institutional investors approach election periods differently from retail traders? Now, we suggest that retail basically stay out of the market and because you're going to get chopped up. With large institutional investors, you're going to have a lot more funds to play with, and you're going to be basing your trades off of fundamentals, right? You're going to be doing odds and you're going to be hedging. Right. So you are going to have the odds of the election. You're going to have prediction based off of each candidate. And then you're going to be hedging based off of that as percentages, right? You're going to be adding to positions as it goes against you, and you're going to be removing as it goes in your favor, and just basically acting exactly how a hedge fund would be doing. And any change over time, that's how large financial institutions operate, is they might be tracking the prices of oil. They might be tracking wars. Now, John, I want to get a little bit of your take on this, if you've got any insights, because you have been sitting on, I believe, a decent amount of Bitcoin for a long time. So that's not something that I'm very well versed with. So I'd like to get your opinion. Just sitting and holding, is that the play here?
Yeah. So my personal play for this election is there's going to be two outcomes. I think one outcome, we're going to see some volatility with Bitcoin, that's for sure. So during that volatility, we're obviously going to see a dip. To what extent? I don't know. But with one of the candidates, I would expect to see a very, very large dip. And if that scenario plays out, I'm probably going to be putting a little bit more into my, into my stack of sats. So that's my immediate play. My long-term play, I've been in Bitcoin, as you're well aware, since 2012, 2013. I've been sitting on this for a long time. Bitcoin back then was like $300 or something. And wow. It was, I was bullish on it since then. And I was told by so many people, I spoke about it with my own dad. I spoke about it with other people. They're like, oh, the news says, it's going to be this, it's going to be that. It's a scam, it's a Ponzi, whatever. And I just looked into the technology itself and realized the problem space that it was solving, and realized, yeah, you know what, this is the future. And I mean, in the prop space and beyond, like whenever you're sending money internationally, what's the most convenient way to do it? It's with cryptocurrency.
Yeah.
What's the first cryptocurrency? It's Bitcoin, right? And so not only do you have the convenience of having instant currency transfers, but you also have a hedge against inflation. You cannot inflate Bitcoin. There's 21 million coins. That's all there'll ever be. And it's divisible down to 1/100th millionth of a coin, which is called a Satoshi. But anyways, I diverge. What I'm going to do is I'm going to do what I always do. I'm going to watch the markets tank, and I'm going to watch the markets soar, and I'm not going to care, and I'm just going to keep holding.
Yeah, and that might be the play for a lot of the retail investors that, previous question had asked, is what's the difference between how would you act as a retail versus a, large institution, is you might want to just sit back and keep those holdings and believe what you believe, right? You believe Bitcoin's going to go up, then you might as well hold it. If you believe gold's going to go up, you might as well keep holding it and just buy if it happens to crash, right? Now, I've got another question here. Ryan, I'm hoping you might have an answer for this. The interest rates. Now, my understanding is they're not directly correlated to the leadership of the presidency, but there can be some effects from new leadership changes. What's your take on this?
I mean, I wouldn't really correlate them. They're correlated to policies that the president or the government has. But at the end of the day, this is how interest rates work. The economy is either strong or weak. And if you have very high interest rates or higher, the economic landscape has to be able to support that. And what happens when things like inflation and so on, that's also a tool they use. But where we were at, or where we are at right now, the economy cannot support high rates right now. That's my opinion. I do not believe that the economy can support high rates. If you asked me a year ago, I would say the housing market was about to tank and everything. But now they are in a position where they're forced to start decreasing rates. which is what they've already started to do. So you're going to have more affordable money, and it's going to be flushed into the market. You have that coupled with hopefully some, good policy coming out. And I think rates will be pretty favorable for a while, but I would not say that they're directly correlated to how the economy is doing. And the economy tends to do better with a certain party versus another party. I guess I'd answer it that way.
Yeah, excellent. So historical data, we got a question on historical data, and I'd like to just touch on a point that I believe I was looking into. Now, I may have my dates wrong and everything like this, but my understanding in the previous elections, there has been it's about a 2-week buffer that we have extreme volatility, and the market tends to bottom out if there's a new presidential candidate coming in and the market's doing well. We tend to have a spike down within a 2-week range, and you reach the bottom within that. So the question is, would historical data play a role in the market during these high volatility times, right? And yeah, Ryan, did you want to touch on that more?
Oh yeah, I mean, historical data and historical track records. And so if for instance, one of these candidates, and again, both of them have their pros and cons, whatever. One of the candidates has already been president, right? And the economy and the market. See, one thing the market does not like is uncertainty. It does not like uncertainty. Well, one thing is for certain is that the economy did great under the candidate who's already been president. So if that person were to win, I think that definitely catapults the market. The other person has not been president, so it depends on what policies go into place and so on. But I definitely think when you look at historical data in that way, that it's definitely meaningful if you're trying to plan out what's going to kind of happen in the future.
Now, that's a good point actually make, because the one candidate has been vice president. And I think it's pretty obvious who we're talking about here. The one has been vice president and the one has been president, right? So both of them have historical data, right, that you could look at if you are interested in that. Now, whether or not that overlays into the future is completely subjective up to oneself. If they made significant changes, or if it was just a trickle from previous effects from previous leadership, right? Guys, let's talk about red folder news events. It should be pretty obvious that the entire day today is a red folder news event. That in the prop firm space generally is not seen too well. People don't like trading red folder newses. And the election is a widespread across the board. This is not a day that you want to be trading. John, let me know, why should somebody not be trading these red news events? And why is Maven really trying to ingrain that into people's heads to make them a better trader?
Sure. Well, I mean, essentially, if you're gambling, I pretty much got the answer right there. If you're trading today, you're gambling, right? I mean, Hunter said it before. We see Bitcoin going up based on what? What is that based on? It's based on nothing. It's based on people's emotions. There's no fundamentals behind that. I mean, we know that there's going to be volatility coming up, and we've seen it over the past couple of days. We know that there's going to be huge spikes and huge dips, and overall, what's going to happen for the average trader, if you were to average them out, if you took 100 traders, put them into a room, you're going to have a large portion of them are going to lose. The much larger portion than those that win. That's just how it's going to play out. That's the human psychology behind it. That's the market's not reacting the way that you would expect them to, and happening in an instant. So I understand why Forex Factory paints the entire day as red folder news. Now, I mean, if you were to, if you really think about it, I mean, the real volatility is going to occur when the results start coming out. No matter which candidate wins. And I think we're going to see the most volatility that we've ever seen in the history of Maven over the coming next week or two. Worst case scenario is we have a contested election, which would just prolong the period of volatility. So we do hope one way or another that we do get a solid answer on who the winner of the election is tonight.
Yeah, there's a good chance that the tie or the race is quite close. The closer the race, the longer it's going to take for us to get an answer. And I've gotten some predictions online. People are guessing that we're not even going to see results officially until December. Now, hopefully, we get some sort of inkling by the end of the week, guys. The entire week is going to be crazy. We have, I guess, the first initial signs tomorrow coming in. We had volatility coming in today like I haven't seen all year. 5% up on Bitcoin in 30 minutes on the New York Open. NASDAQ pumping extremely strong. I believe there was 2 giant hourly candles on the stock market open. And we're looking at more coming tomorrow once we start seeing every single trickle of news, Trump won this, Kamala won that, right? Every single time something happens, it's just going to be more and more volume injected in, and that's going to cause more and more volatility. So this is probably going to be happening all November. So guys, we're going to help you navigate through that. If you follow along maventrading.com, if you want to experiment on your own, you can start with as low as $15. Maventrading.com, you can get yourself a funded trading account where you can earn real profits and experiment and challenge yourself to becoming a trader on your own. So I'll ask Ryan this. What could a person do just sitting in the audience here? What would you suggest a couple options they might want to do over the coming next weeks? If let's say they want to trade, because the obvious answer is sit back and do nothing. But then you're sitting back and doing nothing in November. December comes along and now it's Christmas. Every trader wants to actually be making money, right? Ryan, what should they do?
If it was me, I would pick 1 or 2 asset classes to follow that are extremely choppy. AKA for me, it'd be gold and Bitcoin. And the reason I pick the most choppy, volatile asset classes is because I do not think this is an environment where you want to hold something for very long, unless it's long-term money. If we're talking like in John's scenario, which I'm a huge believer in long-term Bitcoin, but if we're just talking about, let's say, a prop count in day trading, I would be in and out of positions very quickly. I would not overly leverage positions right now because you're going to get taken out. I mean, if for something to swing, like listen to what you just said, Bitcoin is up 5% in like 30 minutes.
Yeah.
You know how many people? If you had a little bit of leverage applied to that, you got taken out if you were short that very quickly. I would also say that if you're going to trade, you got to be in a position to be able to watch your trades right now for the next couple of weeks. If you have to go or you have appointments or you're going to be away from the computer, this is not the environment where you put a stop loss in and come back 3 hours later. I would be dead set against that. I would not. If I left my desk, I would not have a trade open in the next couple of weeks.
Yeah. What about, let's say we actually wanted to have a little bit of fun, right? And just kind of treat it like a game here. This is going to be the optimal time, right? How would you recommend a trader actually, if they wanted to have a high probability chance? I remember those days do you remember BitMEX and those crypto exchanges where they had 100x leverage and people would just flip accounts? I know a lot of people sitting in the audience right now saying, hey, let's use this as an opportunity because I got $100 and I want to flip that to 10,000. What kind of trading styles would you guys jump in on here? John, I'll let you answer that one first.
Yeah, you know what? I am not a big fan on heavy leverage trading, simply because, I mean, you might as well just go to a slot machine, put your money in, and just press the button. In my opinion, in this type of scenario, anyways. So honestly, I would probably just mirror what Ryan said. I would be very careful with the amount that I'm leveraging, making sure that I give myself several chances to get it right. And not putting myself in a situation where I'm, giving it a 50-50 chance of being liquidated in a matter of a minute or two.
Yeah, Ryan, I know you like to trade a little bit more than John does. How would you navigate this if your expectation was you just wanted to gamble it, see if you could flip 100 to 10,000?
If all things being equal, there's money that I can just light on fire basically and not care about.
That's the goal.
I honestly, I do what I find something that has a little bit more of a range. When I talked about that ceiling and floor, I'd watch something that has a little bit more of a variance with the range.
Yeah.
And then to entry point, I'd max leverage it. So, or I'd max leverage 2/3 of the leverage. So let's say you can do 100x or whatever, I'd apply like 70 leverage, and then I'd wait to see what happened. I might add to it along the way of that trade, but that's what I do. It's just basically, we call that punting. You're basically just punting, and it's a 50-50 shot if you're going to make out or not. I think there's really not a lot of, it's hard to have a lot of strategy in doing that. I mean, again, if you want to just max everything out, you pick the most volatile thing that moves. I mean, gold or Bitcoin is typically going to have the biggest swings. So those are the two assets that you'd want to do or focus on with that.
Nice. Okay, guys, let's just jump quickly back into the chart. Just check in on this again. We're seeing the 5 minute, the NASDAQ on the top here. We can see that the market through this entire stream, the entire day, market opened and just skyrocketed on the 5 minute, slowing down a little bit. If you're looking in the bottom corner here, you can see that the 4 hour closing really strong, retesting some of these levels, same sort of thing, closes really strong on the 1 hour, moving to the 2 hour here on the other side, strong close, retesting those levels, continuing up and regaining these zones that it was previously lost. Guys, this is the perfect scenario for the bulls. Ryan is beautifully kicking himself there, saying he's right on all of this. And I'm sure Bitcoin probably showing something similar. We're seeing a little bit of a wick on the 4 hour, potential move back down to the downside on Bitcoin, but still relatively strong. Guys, we're going to be wrapping up here. If you're interested in getting yourself a little bit of play money to fun play with, maventrading.com, you can get yourself a funded trading account, simulated trading account, that is, for as low price of $15. See if there's any questions that we want to jump into here.
I got a couple written down.
Sure.
One of them I'll let you take, and maybe one of them I'll take, and John can take. We can all, whatever. The first one is, do you believe that fiat currency will be replaced with digital currency at some point in the near future?
Yeah, totally. I'm gonna jump on that, and as John's maybe dealing with his camera or something, I see him was having some issues. Fiat currency, I think 100% governments are going to release their own centralized fiat currency. And that's just another way that they're going to be able to track you, because that will be 100% written on the blockchain. I believe cash is going to be removed completely, because cash is pretty much the only thing that is completely untrackable right now. And it's going to be a lot easier to track taxes. It's going to be a lot easier to track your expenses and your paychecks. And that's going to be really good for government purposes. Not so much for your anonymity. So some people might be against that, but it does make it easier to pay for everything, I suppose. You don't have to carry cash around, and that might be the benefit. There's no reason for a government not to implement this at this point.
I agree. I think that the only guarantee that you have with fiat currency is that it will devalue over time. Inflation is always going to happen, whether it's low inflation or high inflation, it's going to happen. And over time, paper currency will always devalue. That is the main benefit of Bitcoin. That's why it was created in general. So yeah, I agree. This other question, I'll take it first, but I'd like to hear everybody's thoughts on it. Someone asked that based on, basically what we think is going to happen here with the election. Like, let's just say it goes in our favorable direction, whatever direction each one of us wanted to go in, what sectors would be affected. And for me, I'll take it first. The three sectors that would be the most impacted would, based on, I think, with a certain person winning, would be energy would be positively affected. The financial sector would be positively affected because of just easier ways to do business, less regulation, which over-regulating things is typically a bad thing. And then, of course, this is the one that people don't usually think of. Consumer discretionary would be a great sector to be in because people are going to have more money. As interest rates get cheaper, more people go to Bitcoin. They're hedging against inflation. They're going to have more disposable income. And so things like stocks that focus on vacation spots, cruise lines, that kind of thing, those will typically do well with policies that are in place that are favorable for the economy. So I just kicked it over to you guys to see what sectors do you think in the next, let's just say the next 4 years are going to do well.
John, go ahead if you have an opinion on that one.
Yeah, sure. So, I mean, depending on which candidate wins, I would agree with you, Ryan, that one of the candidates, there's going to be a boom in terms of the financial sector. There's going to be a boom on the global stage as well. One thing that we've seen in almost all countries, with the exception of Switzerland, I believe, is staggering inflation. And what does inflation come from? It's from monetary policy. It stems from governments printing more money, that devalues the existing cash pool. And I believe that one of the candidates is really going to tighten up on that, and we're going to see a difference of what the U.S. dollar does on a global stage. So that's going to do quite a lot for the average U.S. citizen. That will give them more buying power with the amount of money that they have in their savings account. When they go to travel to different countries, it will enable them to travel more to different countries for vacations or whatever it is, because the U.S. dollar will just have that much buying power. So I do believe that one of the candidates is going to have a massive effect on the global stage.
Yeah, guys. There's not much more I need to add there. It seems pretty in tune with the general flow of Republican versus Democrat. One party is more financially driven, one party is more socially driven, right? And those things are going to be present just like always.
Yeah.
Right, Ryan, do you have any more questions there that you had found?
Let me look and see if I can get you another one. This is a good one. This kind of goes into the news thing, but this question is, how do central bank minutes and speeches fit into your trading strategy? That's a good question for you.
Yeah, so the FOMC, probably meeting minutes and whatnot is what we're referring to, I assume. Yeah. Personally, FOMC is always around 11 a.m. my time. I'm kind of done trading by that time. So I like to just kind of watch it. I don't like to be in it. What's great about my time zone actually is a lot of major news events happen at 5:30 a.m. before I've even woken up. I wake up at 6, right? So you can see the spike in there. And then FOMC is at 11. So I basically I'm only trading from maybe 6 to 10 every day is the only time I'm really watching it. I'm getting out of trades by 11 noon-ish at the very latest. So FOMC days, I basically just close out sooner. The difference I have noticed, though, is pre-FOMC is a ranging market. There's never a decisive decision of which direction it's going to go. So I like to just buy and sell the tops and bottoms and then just let it range until the FOMC. And then once the FOMC starts up, I'm out. That's the only difference I apply.
That makes sense.
Yeah. All right, guys, let's wrap it up there. A beautiful event here. We're going to be helping you along the way all of November here. November, I'm going to be gearing the sessions, the broadcast a little bit to, helping you get over some pain struggles that you might have here. I believe we have getting over losing streaks next week. We're going to be discussing other things. The schedule is coming to you soon. Guys, thanks for tuning in. Every single Tuesday, it is now a daylight savings time in the Americas. So it is 5:30 p.m. UTC going forward for the next 6 months of Spaces. Thanks for tuning in, guys. There will be a giveaway winner. Ryan, do you have somebody that you could pick out and announce in on your Twitter page?
I will do that.
Okay. So if you guys aren't following Ryan, can you plug your Twitter handle right now so that people can go follow you and make sure that they check to see if they are the giveaway winner of the $50,000 challenge giveaway from maventrading.com. We do this every single Tuesday. $50,000 winner every single time. What's your handle?
It's Ryan, or I mean, it's gosh, I don't even know my own handle. RML 17.
Yeah.
All right, guys.
17.
Make sure you follow Ryan there for the giveaway winner, and you'll be able to pick up your prize there. Okay, thanks for watching, guys. See you guys next week.
Thank you, guys.